Good morning. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Monday, everybody. We have a special edition of 15 Minutes of Finance on Veterans Day. We had an election. We've had market movement. We've had boomers. We've had doomers. Bitcoin to the moon. Shiba Inu to the moon, Dogecoin, Elon Musk, etc. We got a lot of stuff to cover, a lot of stuff going on, almost all good stuff. If you're in the market, if you're a bull, if you're a bear, sorry to say it, you're going to suffer. You're going to suffer for a few more years, probably till 2030 would be my guess, along with a lot of other investors, a lot of the hedge fund managers, portfolio managers, mutual fund managers, just a lot of people. So you guys, you bears, you might be alone here. Okay, let's go over the term of the day. It is Veterans Day, so I want to say thank you to all the veterans out there. Thank you guys. You do a lot of things that allow, you did things that allow us to be free and allow me to evaluate companies all day and pick stocks, which I really appreciate. Okay, so term of the day is the Veterans Administration. Super exciting, I know, but it's an important idea. We often hear about how veterans don't have good benefits. We don't take care of our veterans enough. So the term is Veterans Administration. So let me read that real quick. The term Veterans Administration refers to the previous name of a U.S. cabinet-level department. Founded at the height of the Great Depression, the Veterans Administration was formerly an independent government agency. It was elevated to a cabinet department in 1989 and underwent a change in title in the U.S. Department of Veterans Affairs. The organization provided and continues to provide medical care, benefits, and essential services to veterans of the U.S. Armed Forces and their families. So, whenever you guys hear, we don't take care of our veterans enough, you guys now know you guys can refer to the U.S. Department of Veteran Affairs or the Veterans Administration. And now you just learned something. Okay, let's cover the news and then let me rant like I always do about everything and anything that I can think of. Guys, who cares who the president is right now? Okay, if you're in the market, you're making money. Okay, you are making money. There is nothing better. Well, I don't want to say nothing, right? We all got preferences and preferred things that we all like. But making money is got to be up there, top 10 for everybody on earth, okay? And when you're invested in the stock market, you get to make money while you sleep, okay? That's good stuff. Okay, so here's the news. The market surge from enthusiasm over Donald Trump's victory in the U.S. election last week continues at midday, with the Dow Jones jumping over 44,000 for the first time. The S&P 500 also advanced, while the NASDAQ was little changed. Tesla shares again were driven higher by the election results on expectations of a reduction in federal regulations and CEO Elon Musk's ties to the incoming administration as an advisor to the president-elect. In addition, shares got an extra boost when Wedbush raised its price target by $100, calling the Trump victory a game changer for the electric vehicle maker. With Trump having said he wants to make the U.S. the crypto capital of the planet, companies tied to cryptocurrencies soared as Bitcoin traded at an all-time high. Shares of Robinhood Market, Coinbase, Riot Platforms, and Marathon Digital parent Mara Holdings all jumped more than 10%. Shares of MicroStrategies shares also soared when the largest corporate holder of Bitcoin said that it paid $2.03 billion to purchase an additional 27,200 Bitcoin. Crazy. Monolithic Power Systems was the worst performing stock in the S&P 500 when Edgewater Research warned that NVIDIA has canceled orders with the Power Solutions company. Man, could you imagine working with NVIDIA? And then, they're the biggest company in the world, the most popular company in the world right now. And they're just like, yeah, we're done working with you. That would crush any company. Ooh, that's got to be brutal. That's like you're dating the hot girl at school and all of a sudden she's like, yeah, you're not cool enough anymore. And then everybody at school also thinks you're a loser, right? I just referenced not another teen movie, but whatever. We're not like that out here, right? We don't worry about who's dating the hot girl and who's not. Okay, as long as we're in the market and we're playing the game. Okay, that's the most important thing. You don't got to have the best winner in the game. You just got to have players. Okay, does that make sense? You don't got to have the Michael Jordan or the LeBron James, but maybe you want the Austin Reeves, okay? Or you want the Chris Paul, okay? You don't need the best player. You just need a winner. And usually what ends up happening over a lifetime, you kill it. I don't know why I ranted about that. Let me get back to the news here. Shares of AbbVie, ticker ABBV, plunged when the drug maker announced disappointing results in a pair of phase 2 clinical trials of its experimental schizophrenia treatment. Interesting. Monday.com shares sank after the workforce management software maker's operating loss increased and its operating margin dropped, and it made changes in management. Wow. Well, I mean, it sounds like they're trying to make some changes, which I like. I also don't know what Monday.com is or AbbVie, so I don't even know why that's on my news here. Oil and gold futures fell. The U.S. dollar gained in the euro, pound, and yen. Bond markets were closed. That's right. Bond markets are different than the stock market sometimes. I don't really fully know why, but they are. Excuse me. Guys, okay, let's get to the nitty-gritty of this now, okay? I'm going to just pull up what everything is. So, as some of you guys know, we have a newsletter that we make. We have stocks that we pick, companies we pick. We try to do one a month. I haven't picked any the last 2 months just because it's so difficult when things are going so well. It's like anything you pick might look good right now. And I've been so immersed in the picks we've already had that I haven't really picked anything new. So this is not to toot our own horn. Okay, this is not to do that. It's more just to show the thought process behind picking a company. So, for example, NVIDIA was picked December of last year. Okay, if you would have got in NVIDIA, let me look it up, in November of last year, let's go to 1 year, well, you would have been up 200%, 198.68%, which is crazy. Okay, in 1 year, that's pretty ridiculous. Other picks we had are Costco, ServiceNow, Cintas, Core, Sound, Kava, a lot of those tickers, SOUN, they give earnings reports tomorrow, so I'll definitely be talking about them on Friday. That was a penny stock when we talked about it, and a penny stock is any stock that's under $5. But they got, luckily, well, first off, if you're a millennial, you know what SoundHound is. Okay, SoundHound was that app you used to have on your chocolate phone. If you guys remember the chocolate phone, you could flip it up and your keyboard would pop out. It was like an MP3, and then if you flipped it up, it was a phone. Man, I must have been in 8th grade when that came out. So what is that, 2007? Ridiculous that I can remember this. But that had the SoundHound app on it, or it was like powered by SoundHound or something. And so you could hear a song, and you'd open up SoundHound and be like, oh, what song is this? And then it'd be like, oh, this is, I don't know, Firework by Katy Perry. I have no idea why that's the first song that came to my mind, but it was, okay? That's so crazy. I want to sing it right now, but I'm not going to do it, okay? I refuse to do it. I will not humiliate myself on my own podcast. But Firework, so you would play Firework, and it would, in 10 seconds be like, this is Firework by Katy Perry. Do you want to download it from the Apple Store or from the App Store or whatever it was at the time? And then now, because SoundHound was so in the sound space, the music space, they are now on the AI sound space. So they're a company that NVIDIA has invested in. And I really, really like them. Okay, there are so many applications for sound, AI, voice recognition in that space that I think SoundHound's a great company to invest in. This is not financial advice. You need to speak with a financial advisor for catered particular to your situation investment advice. But as a company, I think they're a great company. Okay, they've been around for decades, and they're at the forefront of the AI voice space. So, for example, they do all of the phone ordering for Papa John's. They do the AI voice ordering for like Five Guys. I think it's not Jersey Mike's, but maybe Jimmy John's. They do a whole bunch of stuff for Church's Chicken is another one. There's so many. I'm trying to remember what their quarterly report said, but they're on top of it, right? And then NVIDIA invested in them. Okay, they have earnings tomorrow. We're going to talk about them on Friday. That's a great company. Pretty much everything right now, if you're just not participating in the market, you're missing out. You could just be in a Vanguard S&P 500 ticker. Okay, you could literally just go right now to Vanguard and get an account and say, I want to just be in the S&P 500. Okay, pretty much every bull analyst is saying that the S&P 500 by 2030 will, some people are saying it's going to triple, okay, to be at 15,000. I don't really know if I believe that. And that was back when it was at 5,000. Now it's at 6,000. So people think it could be 10,000 is a common one, so doubled essentially. And I'm a hyperbole saying it's probably going to be at 15,000. And the reason for that is because companies are coming back here. Okay, they're going to stop outsourcing things, and that's going to be because of tariffs. Okay, which we often hear tariffs are bad, tariffs aren't good. The best way I can describe it easily visually for you guys is that it's like the best player on the basketball team doesn't want to run the plays the coach is playing. Okay, the USA is the best player, and he's like, I don't want to play this way, and the coach is pretty much everybody else, right? It's the globe. Well, the coach knows that if they're going to win games, they need the best player to be on board. Got to be excited. So he's going to take him aside and he's going to say, okay, what do I need to do to make, LeBron James feel like he's involved and he's excited to play, right? And that's going to be tariffs. So LeBron is going to say, hey, you want us to win games? You want me to be on board and help win? You've got to get the ball to me. The ball's got to go through me. I got to be the person that the ball runs through. And it's that way with tariffs. Trump is basically saying, or not just Trump, but the U.S. is going to be saying, hey, we're the biggest consumer in the world. You guys all want our money. Okay, if you want our money, you now have to come through us. Any U.S. company, you have to come back to the USA. Otherwise, you're going to have to pay taxes to be able to work in China. Or China, you're going to have to pay a tariff to be able to sell stuff here in the USA, right? And that works, okay? And it works only because we're the best player on the team. Hopefully that is a great visual for you. It makes sense in my head, but it's sometimes you understand things and you can't explain them. But I'm also a huge believer that if you can't explain a difficult concept to a third grader, then you don't really understand it yourself. So if that is confusing, guys, please reach out. I'm glad to make me and Brandon the tax expert. He will go deep into how tariffs work. And you're right, or not you're right, but in general, sometimes they don't work, right? Sometimes it doesn't work to get the best player involved. But in this scenario, I just don't see, I think it's an amazing, good idea. And so when companies come back to the USA, it's going to boost purchases from USA companies. Okay. So if our monies aren't going to India or China or North Korea, anywhere, and they're staying here, it's just like building up, boosting up the economy. So, and the market. Tons and tons of opportunities here in the next 6 years. If you guys are scared or nervous, you guys just got to play the game. You don't got to put all your money in there. Just put some of it, right? There's a big theory, or not theory, but a economic consensus that the biggest transfer of wealth is going to be happening here in the next 10 to 15 years. Okay, because the baby boomers are starting to get old, and they have all the wealth right now, trillions of dollars of wealth. And they're going to be passing it on to my generation, the millennials. Okay, there's a whole theory that that's going to be lost money because millennials in general we're not making a lot of money and we're not making good choices with our money. We're big spenders. So there's a big theory that it's going to be spent, lost, not taken care of, not invested, etc. And I would love to try to break that. I don't want to say stigma, but because it's true. Millennials are bad spenders, bad savers. I would love to encourage my generation to be ready for that transfer of wealth, to be able to be good stewards and good caretakers. Because once that happens, this generational wealth transfer could very well create generational wealth. Okay, there's the saying that they use when talking about millennials being bad savers is shirt sleeves to shirt sleeves in 3 generations. What that really means is that if you give someone, $10 million or $5 million in 3 generations, it'll be 0 because something happens along the behavioral line of those generations. So in 3 generations, whatever inheritance a millennial might get, it'll definitely be 0. That is the thought process. And that's why the 1%, right? You guys have heard of being in the 1%. That group it's not constant. It fluctuates. People go in and out of the 1%, and it's because of that thought process that people will spend, make bad decisions, et cetera, when in reality, if they just spoke with somebody and they got the numbers, they might have behavioral changes. So, guys, play the game, invest in the market. Okay. A lot of you guys aren't millennials. Some of you are, some of you are younger. A lot of you are older. I would encourage you, if you have beneficiaries, talk to them. Okay. I know it's awkward. I know it's weird, but when you can get people in the picture and you can start trying to coach the beneficiaries now, you will have peace of mind and they will have pressure. Okay. They will have pressure whenever the money gets passed to them. They're like, oh man, I remember my dad did tell me he wanted me to do this with the money. I want to honor that. But if you just let it be and be like, yeah, he'll do whatever he wants with the money, it's quite possible shirt sleeves to shirt sleeves in 3 generations. Okay. So I want to be transparent about that. We encourage every client we have, the second your beneficiaries, I would say, fully developed or mature, right? Like I wouldn't tell your 18-year-old son, hey, you're going to get $3 million when I die. But when they're 26, 30 years old, have a conversation with them and get them prepared for that. But in the meantime, guys, we're positive on the market. Okay, we're super excited. Right? And we want you guys to be as well. And there's plenty of strategies that aren't, super risky. There's plenty of strategies that can allow you to play the market and also still be conservative in your investment strategy. And I hope you guys speak with a professional about that, or reach out to Brandon and I. We're happy to help you guys, even if you guys don't necessarily become our clients, right? We're not doing this to get clients. We're doing this to build a reputation and rapport and show that we know what we're doing. And we have a track record of that. Okay, I've got 2 years of podcasts talking about how, hey, I think 2025, 2024, we're going to be 5,000, 6,000 market points. Okay, well, guess where we're at right now? We're at 6,000. And I'll admit, I can't always be right. I'll be wrong sometimes, but the idea is to have more winners than losers. Okay, that is the idea. So guys, with that said, that's it for today. Again, I go 2 minutes over 15 every single time. Just thank you again to the veterans out there. And guys, I hope you invest early, invest often. We'll see you next week.